condominium buyers need extra protection in today's market. I'm Tara Ryan, and today's tip from Tara is about what you need to know to protect buyers who are looking to purchase a condominium in the current environment. Specifically, using a conventional loan, Fannie Mae and Freddie Mac have really tightened up the way they look at condominium approvals. After the tragedy in South Florida, Fannie Mae and Freddie Mac have both come out with guidelines that say, look, anything in the documentation that talks about a special assessment, deferred maintenance, anything structural or safety related, most likely makes that project ineligible for Fannie Mae or Freddie Mac financing. Literally, that means you may not be able to get a loan to purchase in that area, in that project. There are such things as non-warrantable condominium loans. So that is when you're not lending through Fannie Mae, Freddie Mac, and you're going to kind of a specialty loan, like a Band-Aid loan, to be able to lend in that project. That, of course, is going to mean higher interest rates, and so that is not ideal. But more importantly, I want to talk about how you know when this problem occurs. Guess what? You're not going to know. It's going to show up in the condo questionnaire, in the budget, in the meeting minutes and documents that the lender is going to obtain through the process. So what's the biggest risk to you and your buyer? That the lender doesn't figure out they have a problem until too late in the process, and now your buyer may not only get the bad news that they can't buy their condo, but they may also lose their earnest money. I got a call from a client just last week that is in that situation. The lender did not notify them until the week of closing. They were past their financing contingency. Here's what I need you to hear very clearly. The condo not being able to qualify for financing is not covered specifically in the contract. So if your buyer is not still protected by their financing contingency, they are on the hook for that earnest money. How can you protect your buyer? One option is a really long financing contingency, but in the situation I described with that lender, it would have literally had to go all the way through closing. We're still in a tight enough market, you're not going to get an offer accepted by asking that long of a timeline. What do I suggest? Because you know I believe in super short or zero financing contingency, because I'm going to get your buyer pre-underwritten in advance. I suggest a special stipulation on any condo offer that specifically addresses, hey, if the project doesn't qualify for financing for the following reasons, the buyer shall retain the right to their earnest money. If you would like the details on that special stipulation, just shoot me, include a comment down below, or reply to the email and let me know, and I will get that information sent to you. As always, we're here to help you and your buyers, whether buying a condo or any other type of property. We would love to help.